Good afternoon. My name is Michelle Haskins, and I am the owner and principal agent of Choice Insurance Solutions, LLC. We are an independent insurance agency licensed in Pennsylvania and Delaware with access to multiple top-rated carriers. We pride ourselves on both educating our clients as well as helping them locate the best policy for the best price. One of our most proud accomplishments is helping to educate over 1,000 households through the Urban League of Philadelphia and other first-time homebuyer workshops. Hopefully, this video will help increase that number. Being educated on the insurance piece of home buying is very important for a couple of reasons. The first reason, you will not get to closing without having home insurance secured in advance. You will have to provide proof of home insurance up to 30 days before your closing. Second, and even more important, your home insurance protects your new assets. Now that you will be a property owner, asset protection is more important than ever. Insurance plays a role in that. So with the time I have with you today, I will share tips. I will not share chips. I will share tips on things you need to know about insurance as a first-time home buyer. But before I dig into my home insurance tips, I want to explain what is going on with this economy and the domino effect it is absolutely having on the insurance industry. So if you haven't seen it on the news, I'm sure you felt the impact of inflation at the grocery store, at the pump, and just in the general cost of things. I certainly have. Insurance is not immune to these happenings. A very important thing to understand about insurance is it is the sharing of losses. You're not just paying for your claims, you're paying for your neighbor's claims and your neighbor's neighbor's claims. Look at it as there being a really big purse in your community. Everyone puts a little money in the purse, and then if and when something happens, you are able to take money out of that purse and be made whole again. So the intention of insurance is to help put you back in the position you were in before the incident happened. Now what's happening is more money is coming out of the purse than is being put in to keep it full for future claims. And this is why we see prices increasing and carriers getting stricter with their underwriting guidelines. Home types I could easily place a year ago are now more challenging than ever. With inflation, the rising cost and frequency of claims, supply chain issues, and catastrophic weather incidents around the country, carriers are responding to prevent from going out of business. Some carriers have already fallen to this fate, so it's a real fear. Now, let me say, this isn't a doom and gloom message. It isn't. It may sound like it, but it's not. See, I am here to help educate and prepare you so you are in the best position possible. Being educated is how we prepare for life versus having life just happen to us. Okay, so back to these tips that I have for you all. So tip number 1. Know what your policy covers and know what it excludes. If you can, get an HO3 policy. I won't get too much into the weeds, but HO3 policies are package policies that include coverage most homeowners need and is usually most favorably priced. Now, in this market, it can be harder to qualify for an HO3 policy. But this doesn't mean you can't get a strong policy. So some things to look for. I suggest choosing a policy that provides replacement cost coverage for your dwelling. This will help ensure the home is rebuilt if it were to burn down to the ground and you're not left homeless. Also, you want coverage for your personal property, the things inside the home. You want liability coverage, aka legal protection, among other things. I'll talk more about that liability later. But make sure you review these things with your agent. Now, you also want to get familiar with the exclusions. All insurance policies have exclusions because insurance is not intended to cover everything. So you want to know what they are so you know how your policy operates during a claim. Some widely known exclusions are, flood. Flood is excluded from home policies. You need to buy a certain flood policy. Wear and tear, natural damage to your home, and damage to your home from lack of maintenance. Because insurance is intended to cover unforeseen, unpredictable losses. Tip number 2, don't skip your inspection. Your inspection will tell you some very important things about your home, including if it is even insurable. But even more important, is the home even safe? I've had clients find out the homes they put offers in were fire hazards or had foundation issues. And please note, most pre-existing issues with the home are not covered by home insurance. So choose your home wisely. Pay close attention to the age of the roof, the age and condition of your electrical system, and the heating and plumbing system. And look, if you see active knob and tube wiring on your inspection report, either walk away or have it updated before you move in. Knob and tube wiring is a known fire hazard. Also, a little benefit, having these things updated can help qualify for additional discounts. So, things to know. So, number 3, start shopping early. I'd say start shopping as soon as your offer is selected, but choose your policy after the inspection. The inspection is when I have seen many clients walk away from a home. No need to put a policy in place that you will have to cancel because the home isn't in good condition. Again, I do not advise skipping the inspection because some do find issues afterward and want insurance to cover it, but that's not what home insurance is designed to do. That's a really quick way to get a denied claim and lose a claims-free discount. So number 4, purchase enough liability protection. So we're back at liability. So simply put, the liability portion of your policy is purchasing legal protection for yourself from things like being negligent and causing bodily injury or property damage. Like, let's say you forget to shovel your sidewalk and someone falls and breaks a bone and gets a serious concussion. Worst case scenario, they pass away. You're on the hook for that. The person or their family will probably sue. And that's where the liability protection will respond to help protect your assets from these sort of instances. Make sure you purchase enough liability to protect your assets. Liability helps safeguard your equity. Number 5, know your budget. So on your loan estimate, there will be a breakdown of what your monthly mortgage payment will be based on 4 things: principal, interest, taxes, and insurance. There will be a line item called home insurance. So if the estimate says $100 a month and you choose a policy that is $125 a month, your mortgage payment will be $25 more a month than the estimate. That's how those things correlate. Also, I don't suggest buying at the top of your affordability budget. So while the principal and interest part of your loan may be fixed, the taxes and insurance are not and will increase your mortgage if and when they increase. Budget that in and consider that to prevent from being house poor. Number 6, consider bundling. Most carriers offer the best price when you bundle your home and auto. So, good to know. So start getting quotes with your auto carrier, but don't stop there. Get quotes with various carriers so you can ensure you're indeed receiving the best policy for the best price. Number 7, pay attention to your deductible. So besides looking at bundling your home and auto, the deductible can provide the biggest difference in your insurance price. And the way that it works, the higher the deductible, the lower the price, and vice versa. This means a $2,500 deductible will cost less than a $1,000 deductible. The reason why? You are agreeing to share in a larger part of any losses you experience. That's what you're contributing, the deductible. So if a client has a budget, and look, who doesn't? We will explore increasing the deductible. A higher deductible isn't the worst thing in the world because why overpay for a lower deductible if you earmark your policy for larger losses? This can help deter you from wanting to put in smaller claims to see if they just might stick in the wall, and you can stick on the wall and see if you can get a payout. And that way you can lose your claims-free discount. But besides that, even more importantly, it is highly recommended that you take the savings from having a higher deductible and put it into an emergency savings account. Starting at 3 months of your expenses is suggested. And not everything that happens to us as homeowners is covered by home insurance. So part of protecting your assets is having a savings fund to help pay for things that can and will pop up. Also consider a home warranty as well to diversify where things may land. Tip number 8, remain mindful of your credit. So to get to the point of being homeowners, practicing good credit habits help make this possible. Credit is one rating factor for your insurance price. Every year, your policy will be renewed, and one thing considered in your renewal rate is your credit. Now, credit isn't the only thing considered, but it can be significant enough to mention, so we're aware. Number 9, don't allow the mortgage company to force place insurance. Now, forced place insurance is for whatever reason you didn't secure or keep your own home insurance policy in place. So the mortgage company will buy home insurance for you that you pay for, of course. So the reason why the mortgage company does this is your home is being used as collateral for that very big check they gave you to purchase the home. They want to ensure the loan will be paid off if something were to happen to the home, like if it were to burn down to the ground. Now, the issue is this. Forced place insurance policies are almost always more expensive, and therefore they will increase your mortgage significantly. Also, they don't cover your interest nearly as much. You may not have liability coverage, maybe nothing for your personal property. Ultimately, you want to be in control of the home insurance piece. Next tip, work with a knowledgeable and trustworthy insurance agent. Like me. That's my shameless plug. But really, I love educating people and sharing things that I have learned that can be helpful. But even if that person isn't me, make sure they have your best interest in mind. And also remember, your relationship with your insurance agent goes well beyond your home closing. They are here for you throughout the years, so it's important that you pick one that you're really comfortable with. Now, I do have an extra credit tip before I go, and it is this. During this process, make sure to speak with an estate attorney on ways to ensure the home is kept with your loved ones in the event of the death of the owner. It's, not fun to talk about, but it's real life. So namely, you want to draw up a will. This isn't insurance specific advice, but it's worth mentioning now that we're talking about graduating to asset protection. So something that may be suggested is purchasing a life insurance policy that would be earmarked for paying off your mortgage and passing it to your family debt-free. Understanding how insurance plays a role in asset protection can make a difference in your family's future. And that's why doing these type of videos and participating in these type of workshops are important to me. I believe an educated consumer is an empowered consumer. And I love contributing to that. So I want to thank you all for your time today and the time that you've spent listening to this video. And congratulations as you all become homeowners in 2023, 2024, and beyond. Bye. I should have my information popping up on the screen if I edit this correctly right about now.